Joining us this morning, UBS media and telecom analyst John Hodulik. John, it's great to have you. It does sound like the cash that's piling up as a result of production going to near zero, you think is not going to be the answer long term.
Yeah, the trends are really going against the traditional media companies. I mean, first on the TV side, you've got accelerated cord cutting, and what I would say is a weak spot in the advertising market, which may turn out to be more secular than cyclical. And then on the D2C streaming side, as you mentioned, we've seen a real slowdown in growth, especially in the U.S. And the companies at this point are frankly, just spending too much on content.
So why aren't cost cuts the answer then, at least for a name, say, like Disney?
Well, cost cutting is definitely a big part of it. Like I said, we started off in 2013 spending about $40 billion a year, the industry, on entertainment content. That's gone to over $100 billion a year post-COVID. So just a massive expansion. And as you said, given the strike, given some cutbacks, we're going to see what I think is probably a meaningful retrenchment there. And that cost savings is nice, but you really got to go back to where we were sort of pre-streaming from a business model standpoint to get the profitability there. That means cost cutting, higher prices for streaming services, more licensing, sort of a broader distribution of the content that they do make.
So, John, if we know that live sports programming has been the glue that's keeping the cable bundle together, what happens as more of these streaming deals get struck around sports? And what does that mean for not only profitability for those streamers, but also for the traditional providers?
Right. So as you said, what people are watching on the traditional TV bundle right now is sports. Ratings have been very strong, and that's for NFL, for NBA. And if you look at what we've seen so far this season with the Hall of Fame game, you're looking at some positive trends there. But increasingly, sports is making its way out of the traditional bundle. Obviously, Thursday Night Football on Amazon is the big one. You guys just mentioned, MLS on Apple. There's other examples. The big change is going to be when ESPN goes direct, probably in 2025. We believe that ESPN, as it stands now, is a little bit over 30% of ratings points for live sports in the U.S. When that is available direct, that could really accelerate change in the linear TV bundle.